a one-day break of the 50-day moving average is not a be-all, end-all, so don't go out and sell a bunch of stuff today just because we broke the 50-day. Here's what you need to know before the bell this morning. Yesterday, the market did break the 50-day moving average. Now, a one-day break of the 50-day moving average is not a be-all, end-all, so don't go out and sell a bunch of stuff today just because we broke the 50-day. Here's what's important about that. The market needs to recover that 50-day moving average by the end of the week. So again, you can break below it, but as long as we get back above it, we're okay. If the market fails, then the next logical kind of support level is going to be right around the 100-day moving average, which is currently around 4270 on the S&P 500 index. Markets are getting a bit oversold here. Now, again, we talk about this MACD sell signal, and this is important because this is kind of what drives that ebb and flow of the markets. So we're getting back to the level that normally the market kind of bottoms for the MACD. So the MACD oscillation is getting back to levels that normally exist during bullish markets. Now again, when we get in a bullish market, the markets are trending bullishly, these oscillations are a lot smaller. When you're in a bear market, kind of that correction period we had last year, those oscillations are a lot deeper. So we're now back into a point to where these oscillations in the MACD, this buy signal, sell signal type oscillation, is occurring at a level. So again, that MACD is getting down to a level where normally markets are getting oversold enough to now generate a buy signal for the next rally. Again, we could slop around here for a little bit more. The MACD could go a little bit lower here. That wouldn't be surprising. We are getting fairly oversold on a short-term basis as well. So again, we've kind of getting this market kind of set up here for at least a rally for a couple of days, just kind of a relief rally after the bout of selling that we've had. Again, then what would happen from there is going to be kind of the next question. Can this market rally back to new highs, continue its trend, or do we have more consolidation? My expectation right now is a bit more consolidation in the markets over the course of the next couple of weeks, maybe into September, and then we get set up for that October, November, December rally kind of into the end of the year. And that would also align with kind of normal seasonal tendencies of how markets trade. Outside of that, if we take a look at the Qs, very much, kind of the same picture we're seeing in the NASDAQ as well. Took out the 50-day moving average. That oscillation also, again, in the MACD sell signal, getting to a level that's kind of more normal for a sell-off in the NASDAQ. Small cap, mid caps, when we get into to that range, that's a very different story from large caps. Large caps have done very well this year, the NASDAQ, the S&P 500. Mid cap, small cap stocks have really gone not anywhere. But again, we are kind of taking out some of these levels on the markets here. The MACD sell signal still in place here. Took out the 50-day moving average, very much the same as the large cap and small mid cap and NASDAQ. Support is, not too far below where mid cap, small caps are currently trading, getting fairly oversold. So again, it's the same story whether you look at S&P 500, the NASDAQ, mid cap, small caps, all kind of look the same right now, breaking those initial levels of support at the 50-day. Need to recover that, hold there and consolidate a bit, or we're going to get a little bit more of a sell-off as we go into later this month or September. But that's what you need to know before the bell this morning.